They laughed first. That's always how it starts. A tiny island, no land, no resources, no history worth bragging about. Just a humid trading post with delusions of relevance. That's what they said. Japan said it about Korea. Japan said it about China. Malaysia said it about Singapore. Same tone, same smug confidence, same fatal mistake. Because when people mock a place for being nothing, what they're really saying is, there's nothing here for us. And capital doesn't care about your pride. Capital cares about exits, protection, yield, and rules that don't change every election cycle. While neighbours were busy sneering, Singapore did something deeply offensive. It made money boring, predictable, and safe. No drama, no ideology, no emotional nationalism screaming into the void. Just contracts that hold, courts that work, taxes you can calculate, and a financial system that doesn't treat investors like livestock. So what happened? Money moved first. Not tourists, not bloggers, not YouTubers. Real money, ugly money, institutional money, private banking, family offices, regional headquarters, funds that think in decades, not hashtags. When Japanese firms were busy hoarding cash internally and starving wages to polish EPS, Singapore was busy importing decision-makers. When Korea was still apologizing for being Asian, Singapore was pricing risk like Zurich with palm trees. When China was booming but unpredictable, Singapore quietly became the insurance policy for Chinese capital. And Malaysia? Malaysia kept saying, relax, they'll come back. They never do. Because once capital leaves, it doesn't return. It reproduces elsewhere. Real estate first, prime districts, office towers, logistics hubs, data centers, then secondary spillover, schools, hospitals, international talent, service ecosystems. This isn't migration, this is financial gravity. Japan learned this the hard way. They laughed at Korea's chaebols. They mocked Chinese manufacturing as cheap and dirty. They assumed superiority would last forever. Now Japanese retirees buy condos in Bangkok. Japanese engineers work under Korean management. Japanese capital hides in Singapore because Tokyo policy feels like a hostage note written by bureaucrats. And here's the part nobody likes admitting. People don't pack bags because they hate home. They leave because the spreadsheet tells them to. Tax efficiency, asset protection, currency risk, succession planning, liquidity. Love doesn't beat math. So when you see people quietly relocating, restructuring portfolios, moving listings, shifting headquarters, you're not watching betrayal. You're watching a verdict. And the verdict is brutal. Singapore wasn't nothing. It was the exit door everyone pretended not to see. Governments argue, citizens debate, comment sections scream. Markets don't do any of that. They just leave. Stocks, bonds, property, FX flows. These are not opinions. They are votes with money. And the vote was unanimous. While politicians were busy giving speeches about dignity, history, and national potential, capital was quietly dumping exposure. Look at the pattern. It's always the same. First, equities. Listings move. Valuations compress. Multiples refuse to expand no matter how many patriotic slogans you inject into earnings calls. Then currency. Soft peg. Managed decline. Export competitiveness. Cute euphemisms for we can't defend this long term. Then real estate. Domestic buyers vanish. Foreign buyers get blamed. Transaction volume collapses before prices admit reality. By the time normal people notice, it's already over. Singapore didn't win because it was loved. It won because it was readable. Clear tax regime. No surprise capital controls. No moral lectures about where your money should stay. You earn. You invest. You exit. No drama. Meanwhile, elsewhere, governments treated capital like a disobedient child. Stay loyal. Invest locally. Be patient. Capital responds to that the same way water responds to a clenched fist. It slips out. Japan tried shame. Korea tried nationalism. China tried control. Malaysia tried denial. Singapore tried spreadsheets. Here's the uncomfortable truth nobody wants to say out loud. If your stock market only goes up because wages go down, that's not strength. That's extraction. If your real estate prices rise while household formation collapses, that's not prosperity. That's capital cannibalizing society before it leaves. And capital always leaves after it's done extracting. That's why smart money doesn't wait for social collapse headlines. It watches leading indicators, corporate HQ relocations, private bank AUM inflows, family office registrations, office vacancy tightening while residential supply stays tight. Those are not lifestyle trends. Those are escape velocity metrics. So when you see people suddenly packing bags, selling apartments, moving kids to international schools, restructuring assets offshore, they're not panicking. They're late, because the market already voted years ago. You just ignored the ballot box because it didn't look like one. Here's the part nobody on television will say clearly. Governments don't misread capital flight. They hide it, because admitting capital is leaving means admitting the system failed. And systems never confess. They reframe. So you get speeches about long-term vision while short-term money evaporates. You get slogans about national resilience while foreign ownership quietly restructures through holding companies. You get told to be patient while the wealthy file paperwork. This is not incompetence. This is managed denial. Look at the playbook. Step 1. Blame global conditions. Rates, wars, the Fed, China, anyone but domestic policy. Step 2. Shame capital. Accuse investors of greed. Accuse migrants of disloyalty. Accuse young people of running away instead of building the nation. Step 3. Milk what's left. Raise consumption taxes. Freeze wages. Encourage pension funds to buy domestic assets nobody else wants. This is how decline is financed. Japan perfected this art. For decades, citizens were told everything was stable, while household savings were quietly recycled to prop up zombie firms. Internal reserves exploded. Wages stagnated. Asset prices became theatre. And when Japanese capital finally moved, it didn't go back to Osaka or Nagoya. It went to Singapore. Because Singapore doesn't pretend money has feelings. No sermons, no guilt, no patriotic begging, just terms. You want to list here? Here's the rule book. You want to park assets? Here's the tax schedule. You want to exit later? No surprises. Compare that to Japan, where policy is a maze, demographics are collapsing, and every reform arrives 10 years late and watered down to avoid offending someone already retired. Capital sees this faster than people do. That's why governments hate talking about flow data. They'll show GDP, they'll show employment, they'll show confidence surveys, but they won't show you net private capital movement, cross-border property acquisition ratios, family office registrations per capita, offshore trust formation, because those numbers don't lie politely. They say, we don't believe you anymore, and once belief is gone, no stimulus can buy it back. This is why people packing bags isn't a trend, it's a lagging indicator. The decision was already made in boardrooms, compliance offices, and Excel sheets years earlier. Citizens hear speeches. Capital reads footnotes. Here's the scam dressed up as patriotism. When capital leaves, someone has to replace it. Governments don't print credibility, they print obligations. So who gets stuck holding the system together? Not hedge funds, not family offices, not executives who already moved their assets offshore. It's workers, salaried people, middle-income households who can't just optimize their lives with a wire transfer. This is how the extraction works in real life. Taxes shift from capital to consumption. VAT up, fees up, social insurance adjusted. You pay more every time you breathe. Wages freeze because competitiveness. Bonuses vanish because uncertainty. Overtime becomes unpaid patriotism. Meanwhile, asset prices stay high just long enough for insiders to exit. Stocks get buybacks instead of raises. Real estate gets marketed as prime while liquidity dries up. Pension funds are nudged into domestic equities nobody else wants. This isn't an accident, it's a controlled transfer. Capital leaves early and clean. Citizens stay late and leveraged. By the time layoffs start, the smart money already sold at the top. By the time property prices wobble, foreign buyers already cashed out via REITs and holding structures, and when people finally notice, they're told to be grateful they still have jobs. This is why relocation stories suddenly explode. Everyone is leaving. No, everyone who can already left. What you're seeing now is the residue. The people who don't own assets large enough to move. The people whose savings are trapped in currency depreciation. The people funding a system that no longer plans to reward them. And the cruelest part? Governments will frame this as a moral failure of individuals. You didn't upskill. You didn't adapt. You should be more resilient. Meanwhile, the same state quietly rolled out the red carpet for capital to exit without friction. That's why Singapore keeps winning this ugly game. Not because it's kind, because it's honest. It doesn't promise social redemption. It offers rules, exits, and arithmetic. Places that lose talent always say the same thing at the end. They abandoned us. No, they were harvested first. You're just paying the cleanup costs. Denial is the last luxury of declining systems. At first, leaders insist nothing is wrong. Then they admit challenges. Then they promise reform. Then they ask for patience. And then the airport gets quieter. By the time a country officially admits it has a capital problem, the capital has already finished leaving. What remains is bookkeeping. This is why comparisons hurt so much. Japan once dismissed Korea as a copycat. Now Korean firms buy Japanese assets. Japan once sneered at China as low-end labor. Now Chinese capital treats Japan like a discount outlet. Malaysia once joked about Singapore being small and irrelevant. Now Singapore is where regional money hides when things feel unstable. History doesn't repeat because people are stupid. It repeats because pride delays math. You can insult people into staying. You can guilt workers into overperforming. You can threaten capital with regulations. None of it works. Because capital doesn't need speeches. It needs certainty. That's why Singapore's skyline keeps filling up, while others argue about identity. By the time politicians finally say, "We must stop the brain drain," the brains already have new tax IDs. By the time they say, "We must stabilise housing," the sellers already exited. By the time they say, "We must protect the middle class," the middle class is already financing retirement systems they will never benefit from. This is the ending nobody advertises. Countries don't collapse loudly. They hollow out quietly, one relocation at a time, one asset transfer at a time, one child enrolled in an international school at a time. And then one day officials look around and ask, why does nobody believe us anymore? Because belief left first. Capital followed. People packed their bags last. That's the real story behind Singapore. Not success. Escape velocity. And once a place becomes the exit door, it never closes.